This is group one of strategy, and our topic for presentation is impact of data and BCG metrics of HDFC Life. My group members are Abhinav, Hemant, Rohit, Utkarsh, Vishwas, and myself, Sankal. First off, we'll start off with a quick introduction about the company HDFC Life Insurance. Can we please move on to the next slide? So HDFC Life Insurance Company is a long-term life insurance provider with its headquarters in Mumbai, offering individual and group insurance services. The company is a joint venture between Housing Development Finance Corporation Limited, that is HDFC, one of India's leading housing finance institutions, and Standard Life Aberdeen, a global investment company. As on 31st March 2020, the promoters HDFC Limited and Standard Life hold a 51.4 and 12.3% stake in the HDFC respectively. HDFC Life per se has 421 branches and is present in 980 plus cities and towns in India. The company has also established a license office in Dubai. It provides multi-channel network consisting of insurance agents, partners, Saraswati Bank, RBL Bank, a direct channel, insurance brokers, and online insurance platform. From here on, my friend Utkarsh will take the presentation forward.
So here we are studying the impacts of data on insurance industry. So as we all know, big data is widely anticipated to be one of the major phenomenon that is going to affect the insurance industry. So here we studied what are the four major types of data analytics that could be used to bring in efficiency in insurance industry. So first would be the descriptive analytics. So descriptive analytics is based on analysis of historic data or the past data. So second would be the diagnostic analytics. Here we find out why some events took place and it required some diverse data as input and hypothesizing. So based on diagnostic, for example, by analyzing the descriptive analytics in hundreds of thousands of homeowners insurance claims, insurance carriers can identify which conditions cause a homeowner to be threatened more by theft or burglary. So next would be the predictive analytics. This includes predicting what events are likely to occur soon. In predictive analytics, healthcare insurance provider, for example, healthcare insurance provider Aetna uses predictive analytics to cut down on number of fraudulent claims while also saving time and money. This compared with high cost of pay and chase once a fraudulent claim is discovered. So last would be the prescriptive analytics, which includes suggesting a course of action for the future. So in prescriptive analytics, it recommends one or more courses of action which can be measured or refined based on results. Prescriptive analytics is always evolving, but are of crucial importance to put the rest of work a company has done gathering or organizing data to its optimal use. Next, my friend will be taking over.
Thank you, Utkarsh. So now I'll be talking about sources and impact of data. So diagnostic and predictive analytics can be used to predict the behavior of potential policyholders and take action based on the outcomes. Firms in the insurance industry have relied primarily on the traditional generalized linear models to assess and price risks. The relationship between the probability and making a claim and different risk factors can be estimated using this statistical technique. Big data is also being used in product development. For example, through telematics. Currently, telematics is known to be used in the case of automobile insurance. Other uses of telematics insurance are also being applied or have the potential to be deployed very soon in the future. Now, telematics automobile insurance is when a black box is installed in the vehicle or the vehicle is connected through the connected car technology. Which can be used to track the vehicle. Things such as speed, throttle, and braking response, and other vital information which can be recorded with the help of a sensor are recorded, and this information can be used to fast track the claim handling of cases and related investigation. It can also be used to track driver behavior and tendencies, and based on that, calculate the premium they have to pay for their automobile insurance. Now, home devices such as Google Home and Alexa, home speakers, etc., are also being used for home automation and security purposes. Things like electricity consumption and surveillance can be done with the help of these connected tech. This data can be used for property insurance claims. Now, next thing is wearable technology can also be leveraged as a source of data which can be used in the insurance industry. Devices such as Fitbit and other smartwatches enable collection of individual activity and health-related data. Data such as heart rate, exercise information, etc. can be collected, and this data can be used as an effective way of calculating the insurance premium for policyholders. To analyze potential groups of consumers who have a specific need, aggregate search engine data aggregated search engine data is used. Targeted digital marketing can be performed by, by understanding the consumers. Price comparison websites for insurance is also one other use of big data. Now, finally, connected devices and social media can assist with the claims of verification process by helping in background checks and other verifications. Now, now Vishwas will continue.
Yeah, so I next slide please. Yeah, so I'm going to talk about the paradigm shift which has happened because of the use of data. So the use of insurance software is changing the insurance sector. It has replaced the normal process for better and has become a key driver in resulting which has resulted in immeasurable efficiency gains. So the first thing is prudent decision making. Until now, insurance industry was labor intensive. Insurers depended upon actuarial analysis to perform decisions regarding pricing, risk, capital management. In absence of dedicated insurance agency software, an exact and crucial analysis could be a difficult task. With the supply of reliable software, there is an improvement within the analysis, and companies can procure the data directly and process them in multiple ways. It has made risk and capital management simpler. Insurers can get information faster and create better business decisions. Second one is the improved operational efficiency. Insurance software saves a lot of your time and is capable of housing all the data in one searchable database and automates the tedious processes associated with billing or reporting. Third one is data security. Encryption and user authentication capabilities of software makes it difficult to bridge the gap, and hence sensitive data of customers and crucial company data can be prevented from leakage or loss. Fourth one is a regulatory compliance. To stay apiece with ever-changing regulations via manual method is unfeasible in terms of time and value. However, the insurance agency software automatically highlights any areas that needs attention. The next one is better communication. Reduced breakdown in communication while working with customers, carriers, and otherwise are reduced by using such tech solutions like task management, automatic notification, and communication tracking. Enhance customer services. The customers that depend upon insurers for quick and accurate assessments of their situations, and also the ability to perform self-service requests. These software with all its inherent features makes the journey smoother for both the customer as well as the insurance agency. Now, with invent, implementation, and therefore the spread of latest technology, there has been an interesting change with operations of insurance companies. This new insurance technology has not only helped insurance companies with the capabilities to penetrate new markets and retain customers, but has also allowed integrated user-oriented services, thus reshaping the industry and making it easy and convenient for all involved within the process. Now, Rohit will continue.
Thank you, Vishwas. So now I'll be talking about the collaborations made by HDFC Life. First one is Airtel. Bharti Airtel, one amongst the world's leading providers of telecommunication services, and HDFC Life Insurance, India's largest private life insurer, have joined hands to leverage the technology and also deepen penetration of mobile services to make a financially secure India. The number of people who have insured in India is fewer than 4% of the population, while smartphones account for 38% of all network services. The HDFC Airtel partnership relies on the respective digital platforms and Airtel's distribution reach and include a phygetical experience in rural pockets to create it very simple for several uninsured and underinsured Indians with a portable to urge a life cover each time they recharge their mobile phones. The policy, which is offered to all and any customer aged between 18 to 54 years, requires no paperwork or checkup. And also, the policies are instantaneously delivered digitally. Airtel has more than 1.1 million stores around India, and its services also cover around 7 lakh non-censored towns and villages, and its network coverage is around 95% of India's population. Hence, it is one of the best collaborative move by HDFC Life to leverage this network cover of Airtel and to increase its business. The second collaboration is Manage Engine. HDFC Life faced a huge problem due to its heterogeneous IT environment. Its website and applications were to be made available to use virtually round the clock for its clientele because it is used by 100,000 plus agents every day across India. The in-house IT team developed many small custom applications that could monitor its systems and alert them for any failures. But it was becoming a tedious and unaffordable job for HDFC Life. They evaluated tools from IBM, Appnomics, and Organize as well as and found them to be generalized and out of their budget. After a month-long POC with Manage Engine in 2013, HDFC Life made an informed and educated decision of going forward with Manage Engine's APM and bought it. With the help of the application manager, the turnaround time of the failure has been reduced from few hours to few minutes, with the IT team getting an alert as soon as the failure or query in any of the hundreds of custom-made applications occurs. This has made the life of IT department easy to control hundreds of personalized applications filled with extensive and insightful data, with the management more open towards it. Pulling up comprehensive reports using application manager gives the CIO a strong say at business meetings about the downtime incidents. The last collaboration is Ripple Hire. The key challenges faced by HDFC in this life insurance sector in terms of hiring employees are how can they enable higher retention among their employees? How can they attract talent to work for the sales role in their products? How can they supply the right talent across the presence in the city in India to their specific regional offices? HDFC Life collaborated with Ripple Hire, who is the market leader in developing employee reference systems. Ripple Hire came up with a creative and gamified engine platform to help employees of HDFC Life to share the jobs with their peers on social media platforms and become the brand ambassador for their organization. Data-driven analysis of the ER platform gave a clear idea on the various aspects of potential employees. Some of these characteristics are track how many employees have participated and gauged the success of referral program, know which vacancies are easier to fill and find the right qualities a candidate should possess to succeed at it, track the number of employees actually hired from this platform and incentivize the referrer employee and leverage this to increase employee retention, and many others. This ER platform built with the use of data-driven techniques helped HDFC Life to attract and hire good talent that are excited to join and stay. Now my friend will continue and talk about the positioning of HDFC Life's products on BCG metrics.
Thank you, Rohit. Yeah, so let us understand why this is required and what this BCG matrix talks about and where we can allocate the products accordingly. So one shoe doesn't fit all and your strategy needs a strategy. With this in line, BCG's Martin Revitz advocates transitioning from the classical approach to more dynamic approach where the strategies are tailored and executed accordingly. And a company should have a portfolio strategy instead of one to allocate all its product. So for that, we have 5 distinct patterns of success. One is the classical, where the already tested strategy just need to be scaled, which is to be big. Then we have the adaptive, where the continual experimentation and scaling up of what works and using that unpredictable environment and pattern of demand, you have to be fast and agile to grow. The third one is shaping. Shaping is collaboration in environments that are simultaneously unpredictable and malleable, requiring company to leverage ecosystem and platform, which means be the orchestrator. The fourth one is visionary, use of imagination to create a game-changing product which will change the market eventually, which is be first. And the last is renewal, where the execution of already existing strategies are done and dusted, and there's a need to do an analysis and deliberate a new course of action. So now let's understand the product accordingly to these 5 success patterns. Next slide. So for the classical, we have the savings plan. Saving plan is the online investment plan which help in systematic and disciplined investment. There's no new any data impact of this. There's no new pattern for this. All the HDFC needs to do is scale up in this. The next one is adaptive. Adaptive is actually because of the new data coming in. Term plan and retirement plan has seen a new demand and a tailored demand from consumer, and the company need to be adapted in order to inculcate those demand. Third one is visionary, where ULIP plan and combo plan. So these can overshadow the other plan in future if implemented successfully. ULIP plan is unit linked insurance plan, where half of the investment goes to your protection and half of the goes to the market, which will give you more returns. And the second one is combo plan, which is specifically targeting individual who has various needs of these kind of instrument. So once these are implemented properly, I think these can overshadow the other plans. Fourth one is shaping. Shaping is where the company is leveraging the current situations and current demand, where children's plan and women's plan have come in picture in recent days, where people wants to secure their children's future, and women's, who especially the single women, which is very niche market, and these plans cater to those kind of customers. And the last one is renewal, which is the health plan, especially with the awareness about disease and the medical success we have gotten in the recent times. These plans need to be changed, need to be tailored according to the needs of consumer, and need to be targeting more specifically. Hence, we can allocate all these plans into different story of success, and we can pool together a template where we have a portfolio of strategies, and eventually which will lead to the success of the organization. With this, we group 1 presented to you HDFC Live. Thank you.